Ann. She's an author and financial analyst, and we are rigging Ann right now.
Good morning.
Good morning, Ann. It's Joel and Dennis from Benzinga. How you doing this morning?
Excited to talk to you guys.
You are? How come?
I am. Hey, it's Monday. It's the middle of May. What else would I rather be doing?
How about this weather? How about this weather, this Michigan weather?
Oh my gosh, it's so great.
You
Love
warming
it.
up? You getting out there planting some flowers and
I did plant flowers this weekend. I certainly did.
Okay. All right.
Turning
Well,
into my mother.
okay. Well, b- before you came on, and this is like right when the show started, I think Yayo popped in and he said he wants to know what Anne-Marie thinks of the spider, S&P, whatever you want to call it. Let's go basis the spider overall market. Anne-Marie, please give us your outlook. Market hit all-time highs on Friday here. What's your take?
Last week I saw a small inverted head and shoulders building on a 4-hour chart. And I tweeted something about it because I thought it was an unusual formation because I've been seeing negative divergence all over the place. And so I said, all right, if this pops out, it should fail, come back and retest this shoulder point, which is what it's doing this morning. And so we are sitting at a moment of truth in short order. Overall, I saw us moving about 2 quarters sideways. And we are probably a little bit over the 1 quarter being essentially sideways. And I think that is still holding. But there's a chance that we have a lot of people who've seen this, hey, I'm going to short it up here. Hey, I'm going to short it up here. And it's been working for them. And of course, that works until it doesn't. And then we put ourselves in a space where we can see a potential squeeze. And so this pullback, this natural pullback into this breach area, which looks to be around 211.75-ish, 212, something like that. And it is coming in there. My supposition is if it can hold that region, or at least hold anywhere to around the 211, this inverted head and shoulders is going to complete. And so that is going to give us a little bit of a punch to the upside. But in the end, this market is too technically divergent to hold the moves and really rally up without coming back and sitting down on top of these essentially flat moving averages. So my thought is, if you're looking at it from a tight time frame, a real short cycle, nothing wrong with maybe putting a little bit of risk action on to the successful breakout when it comes back up through the 212 region after rotating through. But don't leave it there to run because it should really pull back. That is my thought. And not that it's going to collapse or anything. It's just going to come right where all the contention is right now. In the SPY, that number looks like about 208, 80, 209, something like that. I just don't see, there's way too much technical divergence for the chart to hold the level. Doesn't mean it won't breach. That's what a lot of people do technically. They see the divergence and they go, no, this absolutely is going to roll over. And that's not the case at all because we've got a squeeze action here potentially building because so many people are saying, hey, listen, every time it gets up here, I get to short it. And so we've got to think about that action running stops, punching the market a bit higher, and then having it rotate normally is my thought.
Okay, I just want to go in here. I mean, we all look at the charts and we all look at the fundamentals and everything, but a lot of it is feel for the market. And I was looking at the action on especially on Wednesday, but it kind of in the Globex, and it just seemed like there are people that are buying out there. This was at the 2092 level, 2091.50. It came down there like 6 or 7 times intraday. And they just, and it, to me, it's like, and I said this to Dennis, and he characterizes it by the dippers here, but it's just like, it just seems like there's such a bid, and I hate to use that term, so many underinvested funds, so many people are not being the market, so many underinvested individuals, so low interest rates. I mean, is there just this like permanent bid underneath the market, and it just seems like you can't shake it?
It feels that way, but here's the thing. What I think they're doing is just absorbing. So they're coming in and they're absorbing, but there's no pressure higher. And I think that the
Okay.
fact that the difficulty coming from no pressure higher is the real tell. But you are absolutely right. They are investing everything they can into propping up these bottoms. They really, really are. My thought is when we get all that pressure from underneath, but up top, there's nobody willing to take that uh, extension out, everything essentially becomes a bit of a blow off top. And so until something collapses, either these sellers get tired of being pounded on from below as price action moves up, or buyers just can't sustain the sellers coming down and knocking on that floor so many times. Something's got to give, but you've really hit the nail on the head right there. It's what's going on as they continue to prop that up. That really is going to be the tell there. If we come down here and bang on the floorboards just a little bit longer and harder than we normally do, we ought to see this breakdown. But the formation really says, I'm not committing anything else. And I don't know why big money has decided that they're not going to trade expansion zones. They're not. They're just picking up the bottoms and they're, waiting for whatever. But you can see that they're waiting because nobody's putting big money out at these breakout levels.
Well, and one thing is, in the last 6 months, I would say the breakout trade really hasn't worked, but the pullback by the dip has. Because multiple times we
Absolutely.
got up there to 2090, 2190, or to 2090, and we failed and we pulled back to 2050, 2060. If you were buying those pullbacks, it seemed to keep working. So I think people have kind of learned over the last 6 months that the breakout trade hasn't been working, but the buy the dip trade has. So they wait for the pullbacks to buy them on. So what that means longer term, maybe you're right. Maybe we don't have that follow through to drive us up to the next level there, and maybe it will be these just failed breakouts here again. But Joel's right too. I mean, every time we pull back, we find bids. So are we just in a channel? Are we stuck in this channel, Anne Marie?
That's my thought. My thought is that we are stuck in the channel until September, essentially. And that's sort of been my premise for the year. And I think it's because they're watching overall global economic conditions, watching the forecasts there. I don't know why they are not committing to bigger prices, but they're waiting for something, and all the momentum suggests that that weight is going to sort of dribble through the summer.
And also, like if I'm looking for a hedge or putting on the S&Ps or something, it's like when I look at it overnight and it closes near the high like that, it's like I don't have a fear of it like opening up like 20 handles. I mean, that's what you would want, like a breakout, people rushing into it. On the other hand, I know that chances are I'm not going to get a lot on the downside. I mean, even if you had a
I
dip,
know.
you dip overnight at 12 and a quarter, so you would have had to been taking a stab at Friday's low, 13 and a quarter to cover here. That's certainly, if you're going home short at 18 or 19, that's certainly not worth the risk, if, you get stopped out on a 10-15 handle trade. So great look on the overall market here. Like to shift focus here a little bit. Mr. Icon got things going in Apple last week because he is publishing another expose. That's all the street needed here. Rallied it up. I mean, how much attention do you pay to things like that? Obviously, you can't go against them. That kind of news here. Apple's been in the trading range, came hard off earnings. Is this just a range bound stock, or do you think Mr. Icon's going to get this thing back new all time highs?
Well, it has been range bound. It's really been essentially range bound since February. and it's run through that double top action. And what I do notice is that something's going to give on this range bound space because the technicals are sitting in spaces where they normally sit for something to move. My thought is that it is going to break out. I see technical ability for the chart to break out. So if the technical ability is there, and then there's all the horn blowing from the outside space that it should punch, I really am concerned about it breaching its prior highs, though. It doesn't feel like it's got the momentum to do that. It feels like it's got the momentum to get to about, 131 and some change. But after that, it's got to prove itself to show that it's got motion, because essentially, it's still trading inside of the range it had, in February. So it pulled back every bit of what it punched up through earnings, came all the way back down into that trench at about 124-ish. And now it's sitting up here. It's holding the moving averages. We know that in general, if we're above the 50 and it comes into the 50, people are going to buy it. And so I think that the chart's certainly safe from collapse. But if you're looking for something to really get up and run, I'm not really sure that's the chart to do it.
It's kind of just follows right into her theme there of we're stuck in this channel, and Apple obviously, and the overall market's stuck in the channel. Apple is as well. Is there anything that you're looking at? You talk about, stocks that could get up and get ready to run. Is there anything you're looking at right now that you think actually can do that?
Well, I think I have one caveat with this one. I like GoPro.
Oh, GoPro
But
upgraded today too.
Yeah, it's a great story. I think, I was in a crowd last week or week before last, and someone said, listen, GoPro is a camera on a stick. It's not really. There's way more to that. And young people want to document so much of their lives that I think this is really a story that can go places. It's just a little bit extended from its 50 daily right now. It filled the gap nicely. I had a feeling it would do that. And when it held that gap area and began to buy up, there's a lot of buying power sitting here. A lot of people really excited about this one. If it can stabilize a couple of weeks holding this 50 level, even if it punches out, expect for it to come back into that region. If it can stabilize there for a couple of weeks, this is going to be a good story towards the end of the year. I'm really watching this one.
Yeah, Oppenheimer upgrading the stock to market perform here this morning. It is trading up about 31 cents in the pre-market, 50.47. I think I agree. As long as this thing holds above this whole 50 area, really as long as we hold above that gap area. But if I'm leaning on some levels, maybe you got to give yourself a little bit of room because we know they come sometimes take it out. I'd say that low 49.03 from 3 days ago, maybe if we cut out there, maybe that's where your out is. But I kind of like it too. I think it's setting up. I think there's a lot of people. This wasn't loved here really for the better part of the year, and it is finally starting to catch a bit here in the last month. So this could be one of those comeback stories.
Yeah, we talk about this one too. I mean, it's you talk about pullbacks, and sometimes you don't necessarily get a price pullback, but you get a time consolidation, a time pullback, and it filled the gap off the earnings there. So if you were quick on that, you could have gotten a pullback here. But here's another thing where just maybe a time consolidation or a time retreat, and then before it moves higher in price.
Yeah, the one stock that really surprised me is the one we talked about last time. We talked about LinkedIn, and I thought, for sure this thing's going to hold support and bounce off of this region, and it did not.
Yeah.
It is really surprising to me, a stock with so much power drifts so far to the south and is not able to hold on. This one is setting up to look like any bounces from here look like more downside action. But this one's really, really surprised me. What are you guys focusing on this one at all? Are you
Yeah.
looking at it? Or are you?
I'm looking at it right now because it just fell 5 points here this morning, LinkedIn. Actually, just as you've been talking about it here, it's continuing to fall down here. I'm not sure if there was news breaking here on LinkedIn this morning, but I agree. And this has been a social media stock problem here lately because Twitter has not bounced back either. And they obviously
I
fall in the same
know.
category here. So, and Facebook is starting to look at that nice bounce back there 2 days ago. Then it gave some of it back. But this LinkedIn and Twitter charts are because we've been talking about buy the dippers coming in, and they have not come in LinkedIn or
I
Twitter.
know.
That's two stocks that the buy the dippers are hands off right now.
Anne-Marie,
Yeah,
we
it's
got a
hard to think.
question coming out of the chat. And this is what we haven't talked about. General Mills, GIS here, kind of holding up here, kind of an old safe stock, up near all-time highs here. 57 here. It looks like a resistance level. Any take on General Mills?
Well, you know what? I don't normally look at this one, but as I look at it, it's got room to run. Obviously, it's coming into resistance. We can see these old areas right here. It's got a high, way back in, when was that? Beginning of April. And it's holding the region. My thing is, I've got this thing where I just do not buy any breakouts. I just don't. I'm like, not in my wheelhouse, not going to do it. I just do not do it. And so if I'm looking at this one and I'm saying, hey, listen, if I want to hold this and it's got to prove its strength out to me, it's got to behave normally. And what a chart normally does is create a region of resistance, and this one looks like it's about 5650, and then knocks on it, breaches it, rotates up into the first level of resistance it can find. Maybe that's around 5750. And then it comes back into the region to touch it. If I'm looking at picking up something aggressively, I'm going to wait for that real simplistic setup of the pullback into the moving average that's really tight. Maybe it's the 8 I look at. Maybe it's the 10 I look at, something like that. But momentum is now divergent. It's drifting. So I should either have, if it's going to continue, it's going to grind up for the next 50 cents, or it's just going to start rotating over. And if it rotates over and holds that 56 level, comes back up above 5650, then it's going to be a nice chart to hang on to overall, because really, essentially, if we look at this thing, it's been caught underneath 5550 since last year, since last May. And all of a sudden, this March, it's popped up, retest. The chart has definitely got promise. If you're holding it for a longer period of time, it looks perfectly fine. For me, I'm more of a short cycle person, and so I'm going to watch for it to come into that tighter moving average. Would love to see both the 50 and maybe the 8 on the daily come in together and squeeze and hold and bring buyers in with me, because I certainly don't want to be long in a lonely trade long. I'd like to have a lot of other people there, and that certainly brings them in, those moving averages.
57 and a quarter. That was Friday's high, the all-time high up here at 57.73. Sure like to see file through up to there, Rob Hood. We've been on with
Mm-hmm.
Anne-Marie Baiynd. She's an author and financial analyst, trader. She has a book, the Trading Book Course, a practical guide to profiting with technical analysis. Thank you, Anne. A pleasure as always. We hope to see you in the office soon.
Looking forward to it. Take care, gents. Have a great week trading.
All
Thanks,
right.
Anne-Marie.